Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three. Three stocks, three charts, three trades. Rick Ducat takes us through the charts. Here to take us through the trades, Aquiles Larrea is here, founder, CEO, Larrea Wealth Management. So glad you're both here. Aquiles, before we get to some of the names you're featuring here today, big picture, how did you feel about the sell-off yesterday? Did you buy anything? And do you think the markets are good here or frothy or what?
Great question. What I think happened with the sell-off yesterday, completely overblown. They went beyond what should have happened. Yeah, you know, there's some concern there. But once again, you didn't have enough information to make that decision. So we went in, we started buying names like we're talking about here. We looked at Palantir. We've owned the stock for more than a year now. We looked at just basic companies like the stocks we're going to talk about today, and found that they are still a good value right now.
How about names like, and not to put you on the spot, and you don't even have to answer, but how about some of those names like Vistra and Oklo, some of those that were down 20%, and Nvidia that went down to 117. You know, we had Broadcom was a big sell-off. Any of those names?
Yeah, we looked at Broadcom and we felt that Nvidia was a better name. Since it sold off so much, we went in and purchased some. You know, we don't buy big amounts, we don't take big bets, but the bets that we do take, we like to take them at different levels and buy at different times. So we're not afraid to go back in and get something undervalued because we are a value manager in that sense.
All right, let's get to Raytheon. So this name's at new highs. It's at 132 here today, record high, 52-week high, I should note. Tell me a little bit more about this. Had its earnings. Defense business is growing, right?
Yeah, think about it this way. We have a new administration in right now, and this administration may or may not be hawkish in the sense that the military may get even more funding right now. It doesn't matter if we're pulling out of one area, there may be another area that we're going to go in, and who benefits? Your Raytheons of the world, Lockheed Martin, Boeing, you know, all of them were facing significant pressure just 6 months ago, and now they're coming out on top and winning. From my point of view, have done pretty well. I mean, we went back into Boeing at 140, and now it's in the 180s. You know, we went into Palantir at 17, and we went again back in the 40s, and we're going to talk about today where you should take it because there's another 10 to 20% to make there.
And we're going to talk about Boeing later in the show, too. Caroline Woods is going to be looking at that. Tell me, Rick Ducat, take a look at the charts here for Raytheon, which are looking pretty good.
Yeah, certainly. It's been a nice performer during the past 52 weeks. We're up about 45% off of those 52-week lows. And really, it's just been a pretty consistent up and to the right mover here. So if we were to look a little bit more thoroughly at the technical action here, we can see that kind of the phase shift of this chart came when we had that earnings event back in July, a big gap up. We never really filled the gap. We never even really made it back to the opening of the gap or those pre-gap highs. That area would be like, maybe 108 to 110 or so. The lowest point we got since then was more like 113, 114. Right, a falling wedge type shape more recently between those two blue dashed lines. Bullish breakout to the upside, crossed above our moving averages. Now, today, we are pushing above those old intraday highs now, and we can see that we have backed off. We are retesting that old resistance level. Old resistance became new support. Very common situation to have happen in a breakout here, but the question is, will the trend continue in the direction of that breakout here? RSI entering the overbought area, we can see as well. And if we were to move to our next chart, we can see the key volume areas according to volume profile. So we would be highlighting probably around 118 once again. That's a heavy volume node, and another level nearby would be around 125. To the upside, the +1 standard deviation channel comes in near about 138, and you know, that 118, 114, those two areas to the downside would be key support, Nicole.
Okay, look, and you know, is RSI overbought? So look, it doesn't mean this thing's going straight up, right?
No, we're going to face near-term resistance at this point. We're aware of that. As I mentioned to you the last time I was on the show in December, that the first quarter is going to show a lot of resistance in the technology section, in the other sectors that normally don't face this type of volatility, but as soon as we're out of the first quarter, we're going to see much more towards that end.
Okay. Next up, we take a look at Palantir. You were just talking about when you bought it. You bought some more yesterday, right?
Yeah.
Picked up more yesterday. Tell me where you think this is headed. Why do you like this name?
Yeah, we talked about this a little while ago, but
Yeah.
Palantir is heading towards, I believe this is going to be a 125 kind of stock. All right, and I believe that's going to be more in an 18-month run. But I wouldn't be surprised if we get that 10 to 15% that I was talking about. I say 12 months, but you have to be conservative when you're giving those type of projections. I could see it happening in less than 2 quarters, simply because AI is in its infancy right now. So when we're talking about companies like this who benefit directly, Microsoft, Palantir, NVIDIA of the world, these companies are going to benefit best from that. We also think that there's a significant potential for it to go even higher, but it's not going to be as fast. It's going to face some definite near-term resistance right now, but we should see some nice move to the upside. As I mentioned before, 12 to 15%, 18-month period, looking good for that, looking ripe, and it's on a tear.
Okay, yeah. I mean, it really has been. So you expect to see some returns and then go higher, in fact. Rick Ducat, take a look at the chart.
This is one of those situations where it's like nothing can go up forever, and we had some very strong gains during the past year in this stock. We're up 392% off the lows or so. And the recent price action has been more of a range type of activity. Most of it could fit between the green and red horizontal lines there, 68 and about 81 or so, with another low point at our light green line near 58.50 after we had that push to the upside there. RSI trending downward for the most part. Many entries into that overbought area during recent months here since November or so. The downward trend line is still in play. We did still see some bearish divergence there, but it's important to not read too much into that or read it the wrong way. A falling RSI and bearish divergence doesn't necessarily mean an impending collapse. It's more that it means the pace of the gains is slowing down. And like I said, nothing can go up forever. Perhaps the stock is just taking a moment to regroup before another rally to the upside. I'm not saying that's going to happen. Just it's common that price needs to take a breather occasionally. So if we go to our next chart, some areas of interest. Well, we just passed above one right now. We crossed above our yellow 21-day exponential moving average as well as a volume node. They were roughly in confluence with each other near about 74, 75 or so. We also broke out from beyond that short-term white downward trend line. Look at that confluence near our green line, 68 as well. We've got our linear regression line, our orange 63-day EMA, a volume node. All around that area could be another key downside point. To the upside, +1 standard deviation channel lines up with those old highs near 84.80. And for perspective, too, 125, that would be about 3 standard deviations up from our blue linear regression line. Certainly not impossible. That would be kind of where that would line up with our current snapshot of price activity, Nicole.
Okay, thank you for that, because look, he's doing it on the fly. It's areas of interest, and then we hit one. Final thought on this name.
This particular name, you have to understand, you're going to face a lot of volatility before it goes up. And so long as you're okay with that and not betting the farm on it, you're going to do really well. It's going to reward you for your effort.
Okay, next up we have AT&T. A beautiful chart, went from $16 pretty much up to almost $25, hitting a new high here, a new 52-week high, recently reporting and showing more subs and things like that. So tell me a little bit about where you think this could be headed.
Yeah, we think that this stock is going to be moving double digit, definitely within the next 12 to 18 months. And the reason that is they have a good core business. So long as they don't forget the basics, they're going to continue to do well. I also see that the stock recently had a big run up, so we could see a pull back in that stock this first quarter, move into second quarter. Can't be afraid of that. You own this stock. This stock also pays you a 6% plus dividend. So that's another reason to own it, because if you're making 10% and you're getting 6%, That's 16%. Nobody's going to be mad about 16%.
Yeah, no one's going to complain about that for sure. Look, you know, we look at some of these names, the dividend payers sometimes, or just like the old reliables, and AT&T has been getting it right. There was a time where there was a lot of concern about some of the telecom names, but in this case, you've seen a great performance from AT&T. So let's see, Rick, about some of the technicals that you're watching, please.
Sure, yeah. Maybe a lot more bullish activity than you might expect from a big blue chip telecom company type name here. We're up 51% off of those lows. And when we look at the price action, a lot of it fits between those two dark blue lines, a very narrow, very modestly sloping, rising wedge type shape. Recently, we backed off a little bit, though. We had our teal, light blue trend line there going down off of those previous highs near about 24. And RSI as well was backing off during that point. We did see once again some bearish divergence that suggests the level of the gains was starting to pair off a little bit and moderate there. Now today though, big push to the upside. We topped out right around that trend line yesterday, or 2 days ago rather, broke out to the upside. RSI overbought, breakout situation as well from that area, but not really making a whole lot of progress beyond those previous highs near 24. So not exactly what the bulls would want to see here. We're kind of, we had a big race to the upside. Now we're kind of stalled out at the key inflection point, which is those old highs. So if we were to go to our next chart, now we can see the big volume areas are like 2280 or so. That would be around where our gap up formed a couple days ago as well. So that's another noteworthy area to watch because it's a gap. Gaps often can be filled. They're relevant price action areas, and it's also a node. There's another large node just below it near about 22, and then not really much in terms of trading volume until we start getting much lower here. But the 21 and 63-day exponential moving averages also line up with that white trend line and that volume node as well. To the upside though, +1 standard deviation channel comes in just below 26, so that could be an upside area of interest.
Okay. Thank you, Rick, for great charts always. I mean, he's so great with these charts. All of these names you think can go up 10% or more, right?
Yeah, there's plenty of room here. You know what I see the offsetting thing here? The tariffs. If we're talking about a 10% tariff, we're going to see a 4% rise in the dollar.
I mean, there's going to be some tariffs.
Yeah, and we're going to have that. But
yeah.
What you're also going to see is that what if it goes up 4%, the dollar price of the dollar goes up 4%, that could limit the growth because inflation starts heading back up again. So that's the only wrench in the motor at this particular point. But we are going to see resistance this first quarter. You have to be prepared for that. But more on, once this first quarter is done, it looks like all these stocks are poised to do really well. You got two that are defensive in Raytheon and AT&T, and one that just is pure growth engine at this point. Like Rick said, it's a growth vehicle waiting to take off again.
Okay, Aquiles Larrea, great to see you. Thank you so very much. Aquiles Larrea of Larrea Wealth Management. He's the founder there. Names to watch for you. Thank you so much.